Executive Accountant of Astro, and I will explain about company background and management approach of Astro.
Assalamualaikum and hi to everyone. I am Nur Aliaa Binti Ahzali, a junior account executive for Astro. I have been in the accounting field for 3 years and I have experienced a lot of things, and I hope with the experience I had, I can help Astro prepare segmental reporting and interim report with care. Thank you.
Hi, I am Syahindah Nafisah Binti Azizan, a junior account executive of Astro. Today, I will explain about the basic preparation of interim report, accounting policies, and types of interim report.
Hi, I am Nurqurratu'Aini Binti Md Helmi, a junior executive of Astro. I will explain about the interim report.
Astro is a Malaysia's leading content and entertainment company, serving 5.7 million homes or 72% of Malaysian TV household, 7,500 enterprise, 17.2 million weekly radio listeners, FM and digital, 14.7 million digital monthly unique visitors, and 3.1 million shoppers across its TV, radio, digital, and commerce platform. Astro was awarded the overall excellence in CSR by a media company at the Sustainability and CSR Malaysia Awards 2021. It is our privilege to be voted as the platinum winner in the Media Networks category for the 11th year running at the Putra Brand Awards 2020. The company usually closes its account at the end of January, and its Hajj net income is 429,724,000. Our vision is to be a Malaysia's #1 entertainment destination, and the mission is we will achieve our vision through compelling content, products, and experience power by the refreshed technology and a winning team. And here is our list of the board of directors of our company. Now we move to the next management approach of Astro. The factors to consider having a segment reporting are as follows. First, nature of business activities. It is defined as any activities carried out by a company with the primary goal of increasing profits. Second, existence of managers' responsibility for the activities. Each segment is supervised by a segment manager who is accountable for ensuring the segment's performance and maintaining direct communication with the chief operating decision maker. And last but not least, the third is information presented to the board of directors. The chief operating decision maker must consult to the board of directors report, which offer credible information about the entity's overall performance. There are types of segment based on operating business segment, which are television segment, radio segment, and home shopping segment. The chief director who is responsible to make the decision for Astro is Henry Tan Pohock. His main responsibility is to allocate resources and assess the performance of the operating segments. He is also responsible in evaluates decision and performance primarily based on upon product revenues. That's all from me, and I will pass to the next presenter. Thank you.
Thank you, Ms. Natasha. Now I will explain about the process on how to identify the reportable segment and non-reportable segment. Reportable segments are a business segment that have to be disclosed separately according to FAR570. There are two types of tests, which are quantitative threshold test, known as 10% threshold test, and the second test is 75% total revenue. To identify the reportable segment, the operating segment must pass the quantitative threshold test for 10% or more. There are three bases that you can choose to calculate the 10% test. The three bases are revenue basis, profit or loss basis, and asset basis. If the operating segments fall below the 10% threshold test and are not classified as reportable segments, it will be combined under all other segments category. The operating segments that pass the 10% test will be carried on to the second task, which is a 75% task. The entity should at least get 75% of the total revenue. This total revenue only contains the external revenue of the reportable segments that have been identified earlier using a 10% task. Here, Astro is using a profit or loss basis in measuring its operating segment. This basis combines of profit or loss of all profitable or loss-making of operating segments. For the segmental report, the calculation shown in the table is using the 10% threshold test of profit or loss basis. As you can see here, only television and others make the qualification to be a reportable segment, which is 91% and 100% respectively. While radio and home shopping are considered as non-reportable segment as it does not pass the 10% test. The 75% total revenue test already meet the requirement because it get 86%, which is already get more than 75%. New adjustments are created as Astro is aiming to have 4 reportable segments in their annual report. If you look at the table here, you can see there are 3 segments being added to the test. The segment added was film library licensing, digital media, and talent management. The new adjustment has made a change where now we have 4 reportable segments and 3 non-reportable segments. The 75% test also meet the requirement because it gets more than 75%, which is 87%. The new segmental report will change the reportable status. As we have calculated using the 10% test and 75% test, you can see here there are 4 reportable segments that already passed the 10% test, which consists of television, film library licensing, digital media, and talent management, while the 3 non-reportable segments have been combined as all other segments, which consist of radio, home shopping, and others, as these segments not pass the 10% test. These are a few advantages of segment reporting. The first one is improved context. Segment reporting allows the shareholder to get a better sense of the fluctuation that might affect overall numbers. The shareholder can look at the same report to determine if the numbers are sustainable. It's designed to help investors better understand the business and its potential cash flow. The second advantage of segment reporting is transparency. Segment reporting can reveal which areas are profitable and which are drains on the bottom line. The third one is it will help the users of financial statement. The users can have better understanding to the performance of the company and also helps them get an access to the risk and return of the company. Listed here are disadvantages of segmental reporting that the company should be aware of. The first one is difficulty in providing data. Measurement problems have created problems of difficulty in providing and while doing segment reporting. Since the measurement problem influences the feasibility of disclosing certain information, one should look at the problem of determining segment information. The other disadvantage is the problem of misinterpretation. In case of inclusion of inter-segment transfers of sale, it leads to misinterpretation by users of group if the segment sales figures are larger than the consolidated sales figures. Besides the sales figure, another problem arises is the determination of segment costs. The last one is the segments in a diversified company may or may not have substantial amount of inter-segment transaction. Thank you from me. Now I will pass to the next presenter.
I will continue with the presentation of interim report. First of all, there are 2 bases of preparation of interim report, which are condensed and complete method. Condensed method will include the important component at a minimum and the information is summarized. It also provides an update on the latest complete set of financial statement and do not duplicate reported information. Complete method is when the company publish a complete set of financial statement in its interim report. The form and content of the statement should conform to the requirement of FAR570 presentation of financial statement. A statement of financial position statement of profit or loss and other comprehensive income, statement of cash flow, statement of changes in equity, and notes. If an entity publishes a complete set of financial statements in its interim financial report, the form and content of those statements should conform to the requirement of FAR570 for a complete set of financial statements. Astro Company use condensed method in preparing their interim report since the report prepared have less information. Next, we are going to look at the accounting policies used in preparing the interim report. We choose intangible asset and cash and bank balance. For intangible asset, we use computer software to be more specific. Costs that are directly associated with identifiable and unique software product controlled by the group and that will probably generate economic benefits exceeding costs beyond 1 year are recognized as intangible asset. Costs associated with maintaining computer software programs are recognized as an expense when incurred. Expenditure that enhance or extend the performance of computer software programs beyond their original specification is recognized as a capital improvement and added to the original cost of the software. Computer software costs recognized as asset are amortized using the straight line method over their estimated useful economic life of 3 to 4 years. Amortization is included in cost of sales, administrative expenses, and marketing and distribution costs as appropriate. For cash and bank balance, for the purpose of the statement of cash flows, cash and cash equivalents comprise cash on hand, cash at bank, and deposits with banks that have maturity periods of 3 months or less that are readily convertible to known amounts of cash and which are subject to an insignificant risk of changes in values. We are going to look at the types of interim report made by company. Astro Company prepare a quarterly interim report in which the report is prepared for every 3 months. It consists of 4 interim reports for a year of accounting. Since the accounting year end for the company is 31st January 2021, the interim report will be prepared for 30 April 2020, 31st July 2020, 31st October 2020, and 31st January 2021, 4 times a year. The interim report prepared by the company consists of condensed consolidated income statement, condensed consolidated statement of comprehensive income, condensed consolidated balance sheet, condensed consolidated statement of changes in equity, condensed consolidated statement of cash flow. That's all from me. I will pass to the next presenter.
The period for the current and comparative of each statement prepared by the company. Astro accounting period will end on 31st of January 2021. The current and comparative period of each statement prepared by the company according to the MFRS 134. Interim reporting will be measured on 31st of May 2020 until 31st of July 2020, the equivalent to the second quarter of the Astro 2020. For the statement of profit or loss and other comprehensive income, which is SOPL and OCI, the current interim reporting period is 3 months from 1st of May 2020 until 31st of July 2020. The cumulative for SOPL and OCI for the current reporting period is 6 months, which is from 1st February 2020 until 31st of July 2021. The comparative of SOPL and OCI for current interim reporting period is 3 months from 1st May 2019 until 31st of July 2019. Lastly, the comparative SOPL and OCI, the immediate preceding year reporting period is 6 months from 1st of February 2019 until 31st of July 2020. As the statement of cash flow and changes in equity have the exactly reporting period and reporting date. For the cumulative of SOCI and cash flow, the reporting period is 6 months from 1st February 2020 until 31st of July 2021. The comparative of SOCI and cash flow, the current reporting period is 6 months from 1st of February 2019 until 31st of July 2020. For the last part of the presentation, we will make two adjustments in the second quarter by using the Statement of Financial Position on 31st of July 2020. The first adjustment is about amortization. On 1st May 2020, Astro Intangible Asset is costing around RM3.151 billion with its accumulated amortization amounting around RM1.174 billion using the straight line method over their estimated useful economic lives of 4 years. Amortization is included in cost of sale, administrative expense, and marketing and distribution costs as appropriate and none in the year of disposal. On 1st June 2020, Astro decided to buy new company software with a carrying amount of 150 million. The estimated useful economic lives is for 4 years. The carrying amount on 31st of July 2020 after deducting the net amortization is around 2.165 billion. On 1st May 2020, Astro deposits cash and bank balance is costing around 323 million. On 1st June 2020, the company withdraw 150 million to buy a new intangible asset. On 1st May 2020, Astro deposits cash and bank balance is costing around 323 million. On 1st June 2020, the company withdraw 150 million to buy a new intangible asset.